Good evening, everyone. I'm Shamina Baiji. I'm working at the Tech Hub of Natixis CIB, a new initiative launched about a little bit more than a year ago to support our clients in their tech acceleration, whether they are big corporates, SMEs, scale-ups, or even funds. As we did with the green transition, another major big trend, Natixis CIB is committed to play a major role in this tech transformation. I'm happy to welcome you to this event co-hosted with WIN and 100 Women in Finance. And thank you for being here, as well as I'm thanking also all the ones who are connected, and there are many of them today. I have the pleasure to call Barbara Riccardi on stage. Barbara is the regional head of Middle East and Dubai and the chairperson of WIN. She makes us the honor to introduce our conference, and I would like to warmly thank her for being with us, knowing that she has a very tight schedule and she has to run to catch a flight to Dubai then. Thank you, Barbara.
Good evening, everyone. Thank you very much. Thanks for having me here. It's a pleasure to be able to host this event. I think we all know how much tech is key in the business, in the industry, and I think what is very nice to see is that we are able to use the women network to bring business, to talk business, and we have today, three very powerful women who have achieved something in a very new market and environment. And I will not spoil, the presentation of Shamina, but really what is important is that we are able to really connect the dots between diversity of thoughts and bring that diversity into a business which is now in development and the attention of everybody. So it will be very interesting tonight to hear your views. The market has been quite hectic in the last few months and last few weeks in particular when you're looking at crypto, and so we'll be very keen to hear your views on that. And again, a very warm welcome to everyone and a pleasure to be here, and I hope you find this event very useful as much as I'm thinking it will be. Grazie mille.
Thank you, Barbara. Thank you. Well, let's start now. So I would like to welcome on stage our speakers for today's conference, Women Changing the Face of Crypto. First, I would like to welcome maybe Laetitia Grimaud. Laetitia is co-founder and general counsel at D2X Group since 2021. Prior to this, she worked as senior legal counsel within capital markets and blockchain advisory department at Natixis, and she was involved in major blockchain projects. Maybe Ambre Soubiran is the CEO of Keiko, an enterprise-grade market data provider, and previously Ambre worked also in the bank area at HSBC in London and Paris in equity capital markets. And finally, but last is not the least, Claire Lasserre, co-founder of Kanji. Kanji offers SaaS solutions for brands to create and sell NFTs. Welcome to three of you. And Ramzi, please, Ramzi Ameri, who is member of the Tech Hub and working with me within the Tech Hub, and he will help me to moderate this roundtable.
Thank you, Shamina. So let's first talk about this topic, cryptos. I guess that most of you heard about it. It's a very exciting topic. You might heard about the most common and most recognized cryptos, Bitcoin, Ether. So it's something you might know. Maybe just I can start with just one example. I believe most of you maybe have not heard so far about this, let's say, very, let's say, the starting point of Bitcoin. It was more than 10 years ago. It was the first transaction ever settled through cryptos. It was basically a sale of 2 pizzas with 10,000 Bitcoins. So today, if we look at the price, it's equivalent to more than 160 million euros. So someone 12 years ago paid this amount to buy 2 pizzas. And this amount is very, let's say, it's a good thing because it shows you clearly how people today believe in such new type of assets. So you, as I said, you know Bitcoin, but it's not only the main crypto, even if it's, let's say, the reference today. But as of today, we have, let's say, more than 9,000 cryptos. The market reached last year 3 trillion euros, which is quite huge for a relatively new industry. And we can see that the market is still very volatile and subject to lots of, let's say, controversies, but the market is more and more regulated. We can see a wider adoption of the cryptos themselves, not only Bitcoin, but also some other ones. But I forgot only to tell you maybe the definition. It's important to understand more what's a crypto. But in a few words, you can say it's kind of digital currency meant for, it's an alternative payment using encryption and new technologies. And I guess you heard about blockchain. So crypto is based on blockchain, but it's important to have in mind that it's a really disruptive innovation. Today, it's more and more adopted, even if it's not really regulated globally, and we don't have so far a very common standard, but it's evolving, and we see more and more regulation, more and more banks also involved in that field, even if at the beginning, behind the hype of cryptos, we have this willingness to change the setup. Cryptos were initially designed in order to decentralize and forget all these intermediaries like banks. It was kind of, it was a social thing, a social change. Lots of people, and they still believe it. They believe they can develop something without intermediaries, without the traditional actors, without governments. Why? Because they believe we can trust more technology than government. And it's the beginning, it's what influenced the growth also of cryptos. And recently, we all heard about FTX, the bankruptcy of one of the major exchanges in the world, and lots of questions, but we will later talk more about it. Questions about regulation again, protection of consumers, and I believe you heard that lots of scandals, fraud, and so on. But today it's not really the case because it's more and more standardized. It's more and more replicating what's done in terms of controls in the banking industry. But I won't talk more about it, and I will leave the floor to our speakers today. So thank you again. And I let Shamina maybe introducing the first question.
Let's go into it. So as we organize this event with WIN and 100 Women in Finance, I would like to start with a question related to the role of women in the crypto space. We have the chance to have 3 women today. So first question is, could you share with us what is your view about women's role in this crypto space? And maybe I can start with Claire on this question.
Yes, definitely. I think that's a great question because there is a huge gender gap in crypto. So both in terms of like users, investors, so the one that really believes in crypto, and also in terms of like companies, leaders. So in terms of user, Yahoo Finance shared the number that there is 16% of owners of cryptos that are women. So it's quite low. And in terms of leaders, it's even worse because there is only 5% of crypto companies that are led by women today. So why those low numbers? So for me, the answer stays like at the education level. So it's not necessarily related to crypto per se. So it's more like a general fact that can be applied to science in general. So women are very underrepresented in all deep tech companies. Basically, in engineering school, it's the same. You have very few women. So for me, the solution is really that we should incentivize women to study like deep maths, cryptocurrency, AI, if we want to have then women on the market, definitely. The second thing maybe is that we know that in fact sometimes like women they are more risk adverse, and of course today crypto they appear as risky because it's new, because it's a bit shadow, let's say. So this is for the gender gap. However, like there are very good initiatives. Today we are like almost all women panel. There are many like also like groups, associations such as Women in Web3 that tries to educate women on this subject. And there are also like actually even NFT collection that are fighting for diversity in the metaverse as well, because if we want to have a metaverse that looks like real life, then we need to have diversity there too. So I think there is a gender gap similar to every subject in science, but things can get better thanks to like great initiatives that pop up.
Would you like to share with us as a female leader? Do you think something is different for you than maybe what just explained Claire?
So I agree with Claire on the facts. I think they're undeniable. That's how the industry is. And I also agree to your point. It's pretty much the same for all STEM careers and finance as well. However, I think that in crypto, what I feel is that there is some form of bienveillance. Like I feel that I'm going to say something very, maybe a little bit sarcastic, but I feel there's a bunch of weirdos in crypto and that nobody really cares if you're a woman or a man or a trans or a, you know, it's like whatever you are, dude, like we're fine, you know, we're all going to change the world kind of together. I think there is that mindset in crypto more than in finance, for example, which is my old world. Which feels nice. There's an openness of mind that is very much tied to the fact that it is a transformative technology, the fact that a lot of people, you know, now like work behind kind of screens, but by screens it also means that, you know, they can have pseudonym, they can have avatars. There's this NFT stuff where you use an NFT as profile pic, and so the gender actually I feel is less. It's not an issue in crypto. It's structural from the facts. I agree with what you said, but I don't see that as a major issue. And I think that our role as leaders is to embody that and, you know, lead by example, showing all of the, you know, young ladies that are thinking about their career path that you can succeed as a woman in crypto. But I actually think that's true in every areas. Finance is the same, right? I think showing that leading by example, I think is very important. And where I feel quite lucky, and it's probably going to be similar for you, is as a female leader, I also get organically more female applicants. And so organically, we end up, you know, we don't choose people because we try to impose quotas, but we choose people because they're good. And it turns out that I actually have quite some exceptional women applying to Kaiko. So we have a decent balance. I think for a tech company, we have like 35% women, which is pretty
quite encouraging, I can say. Laetitia, would you like to share a word about finance? I think we all know here what is it, but maybe you can say a word about that.
Yes, I mean, for a lot have been said already by Anne, but like at D2X, we're at the crossroad between traditional finance and blockchain. So of course, not many women in either fields. Although we tend to see more and more of them, a lot of initiatives, as you rightly pointed out, in the last few months, and to get more and more women, not only in the blockchain space, but also in the startup ecosystem, and to get more founders, female founders. So I really do think that we're going to the right direction. And we do find a lot of great women, and we hire a lot of women at D2X. I would say there is room for improvement for female developers. I don't know how it is for you, but we do not find any female developer, and that's a shame. So there is really a room for improvement for that.
So we heard a lot about Terra Luna, FTX, some major events in the crypto industry. So what about the future, Laetitia, of cryptos in the light of all these events that can look very worrying and, you know, not so that's so encouraging for the future of such industry?
So what I think is, so the ecosystem is currently cleaning itself, if I can be a bit familiar. So a lot of bad actors did crazy things. They're currently getting bankrupt. And what is going to come our way, not very surprisingly, is more regulation. More regulation in Europe, more regulation elsewhere in the world. Funny enough, straight after the FTX bankruptcy, everyone thought the regulators are going to put their pen down. They're not going to deliver any more crypto licenses, and it's going to be a huge pause. In fact, quite the other way around. So we've got the FCA just straight after the bankruptcy granting to TCI Cap an exchange, a crypto exchange license in the UK. Bitpanda, who already had a license in Austria, just got a license from BaFin in Germany for crypto custody. So it's really the opposite, and we see regulators who actually want to get more involved and regulate more quickly, basically. In terms of our framework here in Europe, of course, it takes time, right? As you probably know, the procedure is absolutely lengthy, is complicated. It takes time. And we need to get all countries on board and agree on the taxonomy, etc. But we are getting there. So early 2023, we're getting the pilot regime, which will allow certain institutions to tokenize listed securities. And then most importantly, 2024 we'll see MiCA, the Market in Crypto Assets Regulation, which basically is inspired from MiFID, which currently regulates capital markets in Europe, and which will be adapted to old crypto assets, basically. That will, of course, bring more stability, more certainty, more trust, and as a result, we'll see more institutions coming in the ecosystem and even participate in the ecosystem. So I think that's, to me, the long term is quite good.
So it means it's a good thing for traditional bankers, investment managers, and most of us are representing these actors. So is it a good thing?
The FTX bankruptcy is a very good thing for banks, if you want. Okay, yeah. Of course, yes, right? Of course. They should be.
Smiling.
Yeah.
Means.
Yeah.
I was nodding approvingly. I think just to add on that, and I agree, but I think also what the industry needs, okay, perhaps more regulation, but I would say also more blockchain. Like, I think we ended up at a situation where we've taken crypto, we've stripped it out of blockchain, we've put it on centralized marketplaces, and we're like, hey, let's deal with this new asset class and kind of disconnect it from its initial purpose, which is something that lives on a blockchain that is either a unit of account used to incentivize a network, that is the means of payment to remunerate a network to maintain a database, or it is a utility token that is used within a specific ecosystem or product or a service built on blockchain, or it's a tokenized security that lives on the blockchain. But I think that where we failed as an industry, and I think the perfect demonstration of that is the FTX collapse, is taking that crypto asset class and completely carving it out from its original purpose or its original meaning, which actually provides it the intrinsic value that it has, right? So what I love about crypto, and I've been in crypto now 10 years, so it's that there's bull and bear cycles. During bull markets, everybody's excited, money pours in, either in the crypto ecosystem because people are putting money in tokens and the token value inflates, or in businesses through VC funding, etc. And because the prices are going up, and I think we mentioned that when we were preparing the call, for some reason, people only look at price as a proxy to the health of that industry. They look at the Bitcoin price. I think it's very reductive, but anyway. The problem is during those moments, because everybody's getting richer, everybody's feeling brilliant, and everybody's a great investor, everybody's a great founder, everybody's a great business owner, etc. And then bear market happens, and then everybody has to start thinking again. And I think now we are forced to think hard about the intrinsic value of crypto as an asset class, how it correlates to blockchain. And I think for exchanges, what we need is more blockchain, right? So I think CeFi, all those centralized exchanges and services and market infrastructure companies are key, but they are key as an on-ramp, off-ramp to interact more with blockchains. I think something interesting that, for example, Binance was the first to do right after the FTX collapse was that proof of reserve, showing the addresses where they were holding the client deposits and being a little bit more transparent. And for me, that is reconnecting. By the way, proof of reserve is not enough, right? It's not a balance sheet, but still, it's about reconnecting the asset class with the technology and with what it means, and kind of, you know, going back to the ecosystem. Blockchain was invented, just to put it back in its context, just after the 2008 subprime crisis as an allergic reaction to highly regulated, centralized banking institutions that had failed in the way they operated and in the kind of way they were building systems. So I agree that regulation is great, but I also think we need just more blockchain.
And just to follow up on what we said during the preparation, well, you said that the Bitcoin level was not the right metric to understand.
Not the only, yeah.
Not the only one,
Yeah.
yeah. And that is, I think, something we can also put a word on, and maybe you can elaborate on this.
Yes, so I'm going to reduce the blockchain world to Bitcoin and Ethereum, which is very reductive, but still not completely wrong. I mean, we have Bitcoin, which literally is a digital currency. I think that's really its core purpose. And then we have Ethereum, which is this massive distributed computer on which people can build products and services and applications, etc. And everybody, you know, in the media, every time Bitcoin loses 10%, oh, Bitcoin has failed, cryptocurrency is doomed, etc. And I'm like, how about we look at the number of new lines of codes that have been written in Solidity? How about we look at the amount of activity at developer conferences, hackathons, people that are working on building services on blockchain, not just the price, which unfortunately is highly speculative, and because there is this global liquidity trading 24/7, it is actually quite volatile as an asset class. And I'm just saying price is a good indicator of the general health of the ecosystem, but I don't think it's the only one. And I think it's important that we also, it's still about reconnecting with blockchain, right? It's about putting Bitcoin within the context in which it has been built, which is blockchain and the use cases and the applications.
Right. I see the time is running very fast, but then it comes to the maybe the last question of our session today, but quite a big one actually, because all you've said is that you're quite still very positive and that there is a bright outlook to come. So what would be your top priorities in the next 12 months? Maybe Ambre, if you want to follow on this one again, or I don't know.
I'll be short.
Okay.
Sales and marketing, and we were talking about it just when we were sitting there. It's hard right now for our businesses. I think we're all providing B2B services. I mean, maybe a little bit less for you. It's not pure B2B, but still you work with people that are quite sophisticated. So we all work with a sophisticated audience, but still we are shaping the market to which we are selling to. And I think that is hard, right? And so my big focus, and I think where we need to work more as an industry, is in educating the financial institutions we want to sell to, educating the corporates we want to sell to. It's really about continuing to provide the substance of blockchain and educating the world, especially people we're selling to. So then we're able to provide them with the services that we've built, right? But that is, I think, what makes it hard. And that's also what bear markets are for, because it's about, pausing and building and consolidating and growing the industry. And I think it's moments where us as providers of services in the industry, we should collaborate and think about synergies and really think hard about that, kind of creating the narrative around why the long-term goal is important, and then retroactively thinking about the steps that we need to take as businesses to get the industry there.
Claire,
Yeah.
maybe a word on that, because there's one thing also Ramzi mentioned is that there's a lack of confidence also because of maybe a lack of understanding of what it is about. That's what you are mentioning right now. So what is your view about that?
Yeah, definitely. I cannot agree more. So today there is a huge crisis of confidence given the FTX, but even before, like all the bear market, all the trading volumes, the price, they are down, blah, blah, blah. What happened is that so we are selling to corporates like a product so they can do NFT collections. So in this context, like in 2021, they were all like calling crazy about like, I want to do an NFT collection because they saw like their competitors doing it. So they just want to do an NFT collection, that's it, without really knowing why, but that was okay. Like they just get a press release, we are an innovative brands or whatever. And now it's very different. Like now they are way more afraid. Plus, it's also a good time to educate them on the value NFT can bring. So it's not only like a JPEG, it's not only about a speculative asset, but it's more like a technology that you can leverage for bigger purposes. So for instance, it can be like a loyalty program. So Starbucks, they are releasing like next week, I think, a loyalty program based on blockchains. So we do see now that the projects that are still successful are the ones that leverage the technology and that gives to NFTs or other crypto assets a real value on the blockchain. So agree, like with Ambre, now we have to educate the market and make sure that the projects built by our clients are bringing like real values to their clients and they are not only like purely speculative, purely branding and innovation.
Laetitia?
So, okay, so for us, very quickly, in the next 12 months, it's going to be getting our license. So we are getting an MTF license, which is a MiFID license in Europe, which will passport throughout Europe. So we're in the Netherlands, but because it's a new license, it will be passported throughout Europe. We'll also be able to actually get some people from some companies from the US, Singapore, and the EEA. So we are working really, really hard on this license. We are still building the tech. We'll have to run all of the tests, and of course, as you rightly pointed, we have to onboard clients, explain, educate. Our prospective clients are big companies, incumbents, so we have to educate them as well, and being able to onboard them, which is quite slow, so it's going to take time. So this is definitely the priority for the next 12 months.
Just to add a little bit on this question, we did not prepare, so it's a bit like a live session. Actually, since the time we spoke, lots of things happened again. And do you want to add maybe something to what we discussed already about your views in the coming months, what will happen, what you will have to fight for, and maybe what is more easier if there's something?
Do you have something specific in mind that happened?
Well, there was FTX when we spoke, and since then there were other ones coming out, being in the same, let's say, mood or bringing the confidence again down and down. So how long do you feel this will continue, and we are really going to have a cleaned situation?
Well, yes, I think so. I think that in the next, let's say, I'm not a wizard, but I would say in the next 6 months, we're going to see other bankruptcies. Let's be honest here, right? We don't really know how exposed other companies were. So we will probably have more bankruptcies. Is it good? Is it bad? It's never good, right? But in this trend of the industry cleaning itself, I think it is quite positive. We have to find positive in it. What's very interesting to point out is that we have some people getting bankrupt, but on the other side, we've got BlackRock and Man Group announcing straight after the bankruptcy that they reiterate their trust in this ecosystem, that they are investing in this ecosystem, and that they will continue investing. And that's very interesting. That's very reassuring to see that. And I think the combination of the regulators not putting the pen down, granting the license, getting quicker, and combining this with big incumbents like them coming into this ecosystem is a really good sign. When MiCA comes in, these incumbents will not only invest, they will participate, which means they will ask to have the MiCA license, and they will play a role in the industry. They will become crypto custodian. They will become crypto exchanges maybe. And that's very important because that will bring more stability to this ecosystem.
MiCA is for next year, right?
MiCA is for 2024.
Four.
Yeah, pilot regime.
Any other words to?
No, I think we've said it, but I agree. I think the next I don't know, 6 months. I think it may be even faster than that. Yeah, I would say that until the beginning of Q2, it's maybe a little. We're gonna have some surprises, even though we're starting to see the big guys that are wobbling right now. We know who they are, right? It's the Genesis and the kind of DCG portfolio, all of that. We've seen exposure. We know about it. Unfortunately, it's terrible, but I think a lot of smaller businesses that are not going to have, back like waterfall effects forever have been very much victim of the FTX collapse. So yeah, I do think, I know we said it already, but I think as an industry, we have a lot of educating to do, because I realize how much it may seem hazy from the outside, how much the media mixes everything. And to their defense, it's hard, and we're in a very tech-driven industry, so we're not very good at marketing, I think, as an industry. We don't have, there are blockchain associations that are strong. I think most of us are part of them, trying to support how we can. But people who really live and breathe blockchain and have this kind of, unwaverable belief that it's a technology that will change the world, I think all of us here are convinced, also don't spend really a lot of time doing marketing for the industry, because we have businesses to run. And I think that's where we will need to collaborate a bit next year in changing the narrative around crypto and what is crypto and what it means.
I guess it went a little bit faster than acceptable and manageable, seems to be. Okay, Claire, do you want to add a point, because you have more a B2C point of view on this? Do you see projects which are still going on, interest from your clients? That's what we see at the Tech Hub right now, that even if lots of things happen which seems negative, there is a strong interest from clients about all this universe.
Yeah, definitely. So there is still like a very strong interest, like many big corpo are building like Web3 teams dedicated to like those new projects, metaverse, NFT, crypto in general. So for instance, like an example is LVMH. If you check on LinkedIn, like there are huge teams that are currently hired by LVMH, for instance. One thing not really related to recent news and regulation, but I do believe if we want to have mass adoption and if we want Web3 to be like deeply adopted by everyone, we need to have a better UX in terms of wallet as well. And so that's something we have experimented. So for instance, both for the brands that deploy their collection, so that deploy their NFT or tokens, whatever, but also for the end user that is going to buy the NFT, they will need a wallet at some point. And today the UX is like very, very poor. So if you ask to the CFO of a brand or the one in charge of the project, like CMO, whatever, to like buy a Ledger wallet, for instance, then they're gonna need to write down like 24 words on 3 different papers. So for them, it seems like super weird. Like it's too far from like the Web2 experience they are used to. So maybe it's not like really related to the news of this year, but it's definitely an innovation or a company that we need somewhere. Like we need to have a wallet that people, like we say, not your keys, not your coins. So basically we want people to be in charge of their keys in a way, but we also want to have a better UX. So there is mass adoption, and even like any grandma or like anyone can have a wallet and store like their coins themselves. So I think this is a company that we need.
Right. Thank you very much for that. Maybe we can go for Q&As. We have people connected also, so please do not hesitate to put your questions on the Teams, and we will get them from the régie. And in the room also, please ask your question to those ladies. Who starts?
Thank you. I want to get back to a sentence that I think, Laetitia, you said, if I'm correct. You said that FTX was great for banks.
Was great for banks.
Yeah, it was a great news for banks.
Yes.
Can you explain a little bit further, please?
So the problem we had with FTX is that the FTX was counterparty to their trades, right? An exchange should never be a counterparty to its trade. This is not the role of an exchange. And if you were regulated as an exchange in Europe, first of all, you will not be allowed to do that. So that's why we have CCPs. That's why we have clearing institutions, for example. So you should not have trusted FTX to safeguard your funds. Okay. Banks have a big role to play. If tomorrow you ask for the PSAN license, for example, in France, and thereafter MiCA, what would you prefer? You would prefer to put your funds at FTX, or you would prefer to put your funds at BPC, for example, or Société Générale? Like, that's just a question. Today, you have no solution like that. Today, if I want to buy crypto, where do I put them? In a ledger? True, but then you have to, as you said, you have to have your 24 words, you have to have your password, etc. It's not very user-friendly. I mean, I love Ledger, don't get me wrong, but I mean, for the people who don't really know how it works. So I think if tomorrow you have a big bank who say, okay, I'm going to do the custody, this will have a massive adoption in the retail space. So that's what I meant.
Thank you very much for this great panel. I had a question on asset management. On the asset management side, we hear a lot about this asset class, but a lot of asset managers are still cold feet in investing in it. What for you would be the key trigger to attract more and more investors in this asset class and to build trust?
So I'm gonna obviously prêcher pour ma paroisse. I think two things. To your point, custody, like, you know, a place that asset managers know that it's safe. The counterparty risk in crypto, which is what happened with FTX, was completely underestimated. Like, people were treating exchanges like they were treating a bank, but an exchange is not a bank and should never be. But for some reason, in the absence of easy, I don't want to get too technical, but there's this notion of cold wallet, hot wallet in crypto, which is what is super safe versus what is slightly less safe custody solutions. For the sake of convenience, people were completely disregarding counterparty risk. And I think that's something that needs to be solved for asset managers to feel comfortable. The regulation is another one, and I think information, right? I do data, our company, we sell data, and I'll give you an example of what I mean by data is important. Bitcoin and Ethereum are highly liquid, highly traded assets that are, you know, I think very decent. I'm not going to give investment advice here, but I would not advise you to look too much at too many other assets right now. But there's this notion of market liquidity, market depth, volume traded. I think asset managers, in order to feel comfortable investing in an asset, needs to have clear visibility on what is the actual liquidity of that asset. On the FTX balance sheet, they had $8 billion worth of their token, which traded 20 million a day. So, you know, any normal asset manager or even an auditor should have looked at the balance sheet and said, well, actually, how can you value something 8 billion when the actual liquidity of that asset is close to zero? You should have a huge liquidity discount, and you need 4 years to execute the entire, and which is exactly what happened, by the way. The entire bank run started when a big owner of their token wanted to liquidate their position, and then the market realized there's absolutely no demand organically for that token. And so all of these notions of, you know, what is the traditional market infrastructure in traditional asset classes, which is reputable trading venues, reputable custody solutions, reputable market data to understand the asset class. All of that are key components for proper institutionalization of the space. I think we're working on that, but yeah, I think that's what's missing for asset managers to feel comfortable. Thanks a lot.
You were saying that initially cryptocurrencies were being used as rewards for successful miners on the blockchain. So in fact, cryptos had a counterparty. But what happened? Because now I'm still striving to understand what's behind cryptocurrency. I mean, for normal currencies, you have counterparties like gold and receivables owned by the states and so on. What's behind the crypto right now, cryptocurrency? What is a counterparty?
So it's the whole point of blockchain is to not have a single counterparty that is acting as a central bank. That's the whole point. It's about disintermediating that. For me, the intrinsic value of, and let's take Bitcoin because it's the most simple cryptocurrency. The value is in having a unit of account that is digitally native, that is censorship resistant, and that you can use on the internet without having anyone that can basically change the value or the reality of the transaction that you're processing, and doing that in an entirely decentralized way. Sometimes it's also good to reconnect with the fact that here in Europe, we trust our monetary system. I think in the US as well, in most kind of developed economies we do, but there are countries, and not so far from here, right? I mean, in Lebanon, there's a huge network of people that are using cryptocurrency as a mean of payment because their money not only is completely devalued, but is also locked within Lebanese banks. And if you look at the history of Bitcoin, this is not, I think, the thesis that's all of what we discussed until now, but I think it's still important to have it in mind, right? We are not in a world where we need an alternative to our current monetary system, but the day we need one, having one that exists, having an alternative to the status quo, I think is very strong. And so today, we use internet in our daily lives all the time. Internet is an incredible technology that relies on a network of computers and of network technology, but that technology did not have a way to have a native organic means of payment that would rely on a network that works in the same way. Why? Because it was hard to create digital scarcity. If I send you a photo, we both have it, right? And so blockchain was invented as a way to create scarcity on the internet, one, and to do that without having to rely on an independent centralized entity. And the fact that we were able to create that digital scarcity means that we're able to create value on the internet and that we have this kind of internet of value. And I think that is very powerful. But to your point, the value lies a lot in the technology and the strength of that technology and the fact that it's essentially an immutable ledger.
Actually, I fully appreciate your point regarding the fact that cryptos could be used and are actually being used by emerging markets like Cambodia or Laos, where you don't have any strong currencies. Now, doesn't this mean that one way to foster the development of cryptos would actually be to say that they provide stable currencies to countries which are either stateless countries without any central functioning government, or which can't afford having their own infrastructure?
So three things. The first one is, yes, but we need better UX, I guess, for mass adoption, especially in emerging economies. Second, I think it's very important to differentiate the two main type of cryptocurrencies. One that is Bitcoin, which is clearly more like a digital unit of account that can be used as means of payment and store of value. The second one is Ethereum and Ethereum-like blockchains, which is here more about the technology of distributing the way we execute code and disintermediating the way we execute code. And code is contract, contract is code, right? So what I love, and when I say blockchain is going to change the world, it's more on the latter. It's more on the way that we are completely changing the business model and the workflow that is used to execute contract between parties. And that is, I think, where the incredible innovation lies. And the value of Ethereum is that it is basically indeed what incentivizes the network to execute this code, essentially. So all the applications use what's called gas, which is how you remunerate the network for executing the code, thereby the contract, instead of the person who is issuing the contract. And that is very important. The network is not the issuer. So I feel we could talk about for hours about that. So I don't know.
Thank you very much. My name is Vadim, and I work for TRM Labs, a crypto investigations company. And I may have already missed this, so tell me if you might have already mentioned it. But I had a question about, early on, crypto was synonymous with drugs and illegal things, and there was a moral panic about it. But it turns out that actually only a very small proportion of crypto is illegitimate. But my question is, now that with the collapse of so many players and the exodus of legitimate investors and players from the crypto, do you believe that the balance is in danger of shifting towards illicit actors, terrorists, and money laundering? And if so, what can be done to protect the ecosystem against that?
We need better marketing.
Okay, so to your question, I mean, more regulation is also getting in there, right? So you've got the travel rule. MiCA is going also to cover these issues. You always have abuse, right? I mean, for example, the mixers are now being investigated. You should never have actors like that, and they're being audited. So I think we're going to the right direction again for this. We're getting heavy regulation coming into play. MiCA is going to change that as well, in the US as well, like everywhere else. But I don't think you can say that you will ever get to somewhere where everything is perfect and you don't have money laundering anymore. This is just not possible. But I think we're getting into the right direction. And I don't think it's that evil.
Yeah, I think blockchain is the worst place to do illegal stuff. That's my 2 cents.
Yeah, it's a good question and answer. And we got an online question about regulation. I guess the person who asked the question is skeptical about regulation because it goes against, let's say, the spirit of cryptocurrencies. So why putting more regulation? Do you believe it will kill the spirit itself of cryptos?
Okay, so yeah, the question is, okay, so to your point on DNA, I don't think that the DNA of crypto is not to regulate it. I completely disapprove of that. I think that the minute you allow people to get their money in there and to have money at stake, and even big institutions, you must protect them. And I don't care about DNA or spirit. You have to protect these people, especially retail. So what you should do is not regulate. If you don't regulate, what's going to happen is what's already happening in an unregulated space, which is more FTX. And absolutely don't want that to happen. So what we should be doing instead is adapting the regulation. And I see what you mean by the decentralization. But the pilot regime is a very good example. So the capital markets regulation have been drafted without crypto, without DLTs in mind, right? So it's totally centralized and it's an issuer-based kind of regulation. So what's being done at an EU level is that we've looked at all the regulation we have, the directives, and we said, okay, a lot of things only work because it's centralized. So how do we do if it's decentralized? Well, we're going to create a pilot where we're going to allow certain actors to ask for exemptions to this piece of regulation that do not make sense with decentralization. And we're going to adapt them to decentralization. And I think that you can replicate that to, well, everything in the blockchain ecosystem. You should not say it's blockchain, it's decentralized, so we're not going to regulate. Otherwise, it's going to be like, sorry for my word, but it's going to be a shit show. What you should be doing is adapt the regulation so that it's adapted and it makes sense for decentralization.
I can see there are other questions online. One is how cryptocurrency impacts cybersecurity. No clue on that one. And the second one I can't read actually. You mentioned MiCA regulation for 2024. Is it really the key to success and recognition for crypto to become a valuable asset class? Is it the only key for success? What do you accept from investors? I guess, yeah, regulation is for you.
Yeah, well, I can't say that 100% it's going to be the solution, but MiCA has been inspired from MiFID, right? So MiFID is the framework that we have that regulates securities in Europe, right? Bonds, shares, so derivatives. So, well, it's been inspired of that. We've adapted that to the crypto assets. So it's working quite well. That would be my guess for securities. So why wouldn't it work for crypto assets if it's well designed, well adapted, well applied by regulators? I think that regulators have a big role to play in that as well. Education is key. Again, if we want institutions to come on board, we need them to understand what's going on, and they really need to understand why they're getting there. But yes, I would say it's one of the key, because if you don't regulate, you cannot expect big institutions who are heavily regulated themselves by MiFID, for example, EMIR, etc., to come in. It's just not possible. So I'm not saying it's the only key, but I'm saying this is definitely one of the biggest key, and at least for the next 5 years.
Okay, Joanna has a question.
All of you talked about how important it is to educate and market. How are you going to do that?
So I referred to industry associations. I mean, we're part of Myriad. There's industry in France. We're part of the Blockchain Association, which is a big association in the US. We're looking at, with a couple of companies and a couple of associations that's working at a more European level. So that's one part where we actually participate financially to support people that are full-time, like lobbying for the industry. I think that's very important. That's one. And second, I mean, doing these things like this, right? I mean, I do probably at least 1 or 2 events a week where, and like last week, it was the global offsite of HSBC, and they were just, you know, I did an hour of, it was not a panel, it was purely like, what is blockchain? Why is it going to change the world? What is crypto, etc. And I think it's very important that all of us founders in the ecosystem, we dedicate time. Like we, you know, I think there's this tech bias in crypto where we kind of feel that the technology is enough, and actually the truth, and I think we feel it every day in our businesses, a great technology without a really good sales and marketing leader is nothing, right? So I think all of us as founders and as actors of building that ecosystem, we have to be sales and marketer for the industry as well. So it's part of, I guess, how at least I do it.
And actually, it's one of the like technology that has the most like many conferences. Like every week there are like every night actually there is an event. And also everyone, like every companies today is quite curious. So they are all like organizing stuff and they just need to have speakers, but it's annoying.
Also about the messages, because at one level, you want to attract big institutional investors because of the capital, because of the investors behind them. And that requires the regulation. But on the other hand, you are decentralized, and that's the whole point about it. It's complicated.
Yeah, so I think we should still, going back to what I said, like we should differentiate Bitcoin, which is like indeed a cryptocurrency, and I understand that central banks don't like it, etc., and blockchain as a technology, right? Because I think blockchain is a technology. Like I'm not against the banks. We didn't really introduce our backgrounds, but I come from 10 years of equity derivative structuring. And I remember when I was like we were doing large syndicate deals for the issuance of put options just to hedge downside for large corporate clients on their own equities. And it was a put option is literally a subtraction, right? There's a payoff if the price goes down between now and the maturity. And for something that is essentially a relatively simple contract, highly standardized, the process, the front to middle to back to clearing agencies, settlement agencies, all of that process is, I believe, in the world we live in today, quite inefficient. And if you think about it, the framework, what blockchain offers, which is a more disintermediated way of executing contracts, could be extremely useful for banks to disintermediate themselves. Or if you think at a group of banks, different ways on, when I do a contract with you, rather than you having your database, me having my database, me running thing on my end, you running thing on your end, and then having a gazillion number of centralized entities verifying everything multiple times. How about we both agree that we need quality code, which is essentially a smart contract, and then we're going to run it on a blockchain, and we disintermediate ourselves essentially, but we make the whole process cheaper and more efficient. And so I think, we shouldn't think of it as a black or white thing. It's either entirely decentralized, unregulated, or, we're still in this highly regulated, centralized world. I think we have seen failures in the highly regulated, highly centralized world. And that's why what I was saying in the beginning is I think crypto will win if we reconcile crypto with blockchain, and that we use all of those heavily regulated institutions as on-ramp and off-ramp to then benefit from the nice efficiency of the technology itself. And reconnecting the, regulation is not going to regulate blockchain. It's going to regulate this on-ramp, off-ramp, bringing people into a place where they can use the technology. And that will still be decentralized, but still you need to regulate. There's like, am I clear or am I? Yeah. Okay. So yeah. I think we should still see it in the scope of a technology that serves a purpose, and the purpose can be regulated.
And if I may add one point is, let's not forget what we are regulating is not the crypto assets. It's the service providers, right? So it's a provider of service on a crypto asset. So an exchange, you want to run an exchange of crypto assets, for example, or you want to be a custodian of crypto assets. And you, as an actor, are going to be regulated. Again, if we take the FTX example, if they were in Europe, regulated in Europe, they could have never operated the way they operated, right? They could have not been a counterparty to the trade because this doesn't make sense. They could have not have Alameda Research, which was a market maker, liquidity provider on their exchange, being the same company. This is a huge conflict of interest, and that doesn't make any sense. Like, it's just not possible. They had no trading safeguards in place at all. In MiFID, you have like tons of RTSs about how you should have throttling mechanisms, reduce-only modes, etc. They had nothing. If they had been regulated, this would have not been the same. So it's not that it's incompatible. It's that it's just, forbidding people, crazy people who are going to defraud and just try to be greedy with money, just preventing those people from doing nonsense, right? So it's just really that. It's just the point of this.
I can see that would be the last one. Go ahead.
If crypto can be reconciled with blockchain, what do you think would still be missing, if anything, for central banks or the IMF to use cryptos as reserve currencies?
So one of the, I think, great validation of blockchain as a technology is all the central bank digital currencies experiments, right? I mean, the reason central banks are looking to create, interoperability between their fiat currency and the blockchain essentially is because they understand that blockchain is a powerful tool. So for me, it's a great validation of the space we're in, that we are seeing initiatives by large financial institutions, central bankers, etc., looking at how can we be interoperable with that technology. I'm not sure, but I think it's great basically, and there's nothing potentially that in the future. I think the bottleneck for all of the financial institutions to use blockchain is tokenization of assets. If we think about it today, all of the traditional assets have already been digitized, right? Everything we do is digital representation of an asset. But once we've been able to onboard those assets onto blockchain systems, then we benefit from the actual technology that blockchain represents. So asset tokenization and on-ramping assets onto that system is going to be key in enabling broader industrial applications.
Thank you very much. We can see there's lots of interest, and crypto is definitely an interesting market. I think we need to better understand what is it about, and I see that I written one thing, that there's a very positive overall, I would say, outlook, and even the way you're looking at what happened is quite encouraging, I would say. There are many projects, liquidity to fuel the future, so we need to follow the next step carefully, I would say. I would like to thank you, Ambre, Laetitia, and Claire, for having been the witnesses of the interest from women and overall for everyone about that subject. The involvement of Natixis is clearly towards all these new trends. I would like also to thank the team which helped to prepare. Amira is there, Laura over there, Annie, of course, and Joanna, I will leave you the floor now for 100 Women. Thank you to you also for having been all together here. Also, thank you to all the ones connected. And last thanks to Céline at the communication team for the organization part. Joanna, floor is yours. Come on the stage, please.
You said everything I was going to say.
No.
Yes, I would like to add our thanks from 100 Women in Finance to Annie and Celine and Shamina and Amira and Laura, and I can't remember who else I should also thank. This is a really good example of the new collaboration between 100 Women in Finance and WIN. So I'd also like to thank Barbara, who has gone, for her support. For those of you who don't know what 100 Women in Finance is, it's an organization of 23,000 women across the globe whose aim is to promote and support and showcase, in exactly the way we've done it tonight, female talent in financial services, and the fintech world, and your piece of the fintech world is very much part of that. There are a number of the committee in Paris. We're a small group of 250 members. There are a number of the committee members here tonight, if they just like to put their hands up so that you can talk to them afterwards and hear more about it. So I'd like to thank Natixis very much for this. We have within 100 Women, a Women in FinTech stream, thought process, an initiative. And I hope this is the beginning and the first of a series of events we can do about this. I'd also like to thank my committee, the committee in Paris, because I, as the chair of 100 Women in Paris, I'm stepping down tonight, and I'm handing over to Isabel and Hannah, if you would like to put your hands up, and just say thank you very much indeed for all of your support over the last several years, it must be said, and I'm really looking forward to seeing how all that goes going forward. And one final piece, we have just got within the 100 Women Network our own LinkedIn page. This is very first stage technology, I understand that, but for 100 Women in Finance, it's quite a step, because otherwise it was all entirely centralized, and we've been working for a long time to get our own local groups, and finally that's happening. So please, if you're on LinkedIn, please have a look. It's coming up anytime, and follow what we're doing in Paris and more broadly. But thank you very much indeed. And the drinks are outside.